had a call with a first-time investor in real estate. Tried to get him to steer away from the guaranteed returns of our 8% preferred return. How do I communicate that?
He's asking if the preferred return's a guarantee.
Exactly.
What did you tell him?
It's not a guarantee. It's what you would earn prior to the GP earning any money from the deal.
The big thing is we always need to make clear there's no guaranteed returns. We can have projections. We can have, preferred returns, which is essentially an annual return that you will accrue and will pay out if the cash flow is available. If we don't have the cash flow to pay the preferred return, that accrues and builds up and you get it eventually, assuming that we start making more cash flow or sell the property at some point. If he wants, a guaranteed return, he can go out and buy a 10-year treasury, but anyone that's going to be telling you that there is a guaranteed return is frankly, full of BS, and they don't understand anything about securities laws, because there is no guarantee in life. And especially what we're doing, it's an equity investment. There's risk. Multifamily has some of the best risk-adjusted returns. You can get really strong returns. If you do it the right way, you can take on a minimal amount of risk, but there's risk in everything. And so the last thing we'd want to do is way over promise, and even if we deliver, they're still up because there's some sort of guarantee. And by the way, on some deals, we project that we won't even be paying the full preferred return in the first year. And that's because that's just the way that opportunity looks. We're typically going through, fixing the property, increasing rents, increasing that operating income over time. And so just because we hit 6% year one with an 8% pref, that remaining 2% of return, that accrues. You'll get it down the road as soon as we have the cash for it, but it's a way to align interests, giving the LP investors a little bit more juice at the beginning. So even if cash flow is lower early, they get a little bit of that later on. And make sure they understand truly what that preferred return is. It's not an absolute, you're gonna get 8% no matter what. The economy could crash. We could crush it and deliver 10%, but there are no guarantees in life, certainly not in investing. I'd rather have them go in eyes wide open rather than have some idealistic vision of what it's going to be.